Good morning, everyone. This is Shalon Powell, founder and CEO at Caribbean Institute of Traders. This morning, guys, we're going to trade gold versus the US dollar. We're going to look at two reasons. Number one, the technicals. Number two, the fundamentals, which is the why. Why are we trading gold versus the US dollar? Our forecast for the day is bullish, which means we're going to buy gold. So let's look at the technicals first so that we could enter the trade, then the fundamental aspect to answer why we're going to enter the trade. It's 9:35 Eastern Standard Time and it's 10:35 Trinidad time. As you guys realize, it's 9:30 Wall Street. We're 6 to 10 minutes into Wall Street open bell. Let's get started. For those of you who are now watching our first series of videos, I'm going to go ahead and draw what is called a trend line. Alright, let me explain this again. To the bottom of the chart, it explains the month, okay? Each month from April to May to June to July, August, all the way down to January, right? So you're able to track the trend of a currency or a commodity by using what is called a trend line, right? So just to have an idea of where the trend is coming from, to know where it's going, we're going to use what is called a trend line. Everything is explained in our course. Let's get started, guys. We're going to draw a trend line from May low, right? Just to have an idea the market trend, okay? Now, in our course, when drawing a trend line, your trend line should be on the lows of the candles. Not going through the candles, but the low, majority of them. So let's come here and edit this. Right. Now this is our trend line. This is telling a trader that one, gold from May the 20th, from the 17th of May 2012, gold is coming from 1526, which is 1,527 US dollar an ounce. Okay, that's where gold is coming from. You guys should write that down. $1,527 an ounce and 21 cents. May last year. Okay. Now, today, gold is at $1,678 an ounce, which means it's still intact with the uptrend. Reason being for that, guys, on my chart, blue candle represents bulls, which means the market is going higher. Red candle represents bears, which means the market going lower. Okay. Now, let's see going with this. All right. The 4th of January, gold made an attempt to break the trend line. Okay. You see this bearish candle, right? Followed by another bearish candle before gold retrace and turn into a bull candle. You realize it is blue, right? So currently, this candle was a bearish candle. It went all the way down to 1626 before turning back and close above the trend line. Being a currency trader, guys, or a commodity trader, this is telling us that the uptrend is still intact. Why? We did not get a bear candle below the long-term trend line. For me, all of the candles are above the trend line, which means it's in an uptrend. So what we're going to do is buy on reversals. So we're going to go ahead and buy gold, okay? And I'm going to explain. We're buying gold at 3 cents a pip. Okay, give me 1 second. Confirm. Right. Right. Yes. Perfect. Now, guys, we bought gold at 1,677 US dollar and 99 cents. Okay. Based on our previous trades in the past, we bought gold sometime last week at the same price. Now, we got out the trade, the market rallied, we cashed out, it retraced again, we entered close to at the same price. You could view our track record on our website at results, okay? Now, let's go ahead and put in our stop loss. Let me explain where we're going to put our stop loss. Because this is a trend line and the market came down to touch it, today, guys, which is the current candle, the market opened at 1665, right? We're on a daily chart, so each candle represents a day. The market opens at 1665 and currently it appreciates for the course of the day, through the course of the day so far, it's a 1678. So we're going to put our stop loss at the opening price, which is 1665, okay? The reason why I'm doing that is because of my experience in the field. Currently it's above the pivot. The pivot for gold for the day, everything is explained in our course. The pivot for gold for the day is 1660. So once you are above the pivot and the market is going up, you're in a good trade. All right, so that's the risk capital. So we're risking 65.70. We're risking roughly $12 on this trade. Right, we're risking $12 on this trade. We're going to go ahead and put our downward trend line to have a gauge of the trend, the upswing, I should have said. Now you realize the market going up, down, rally, decline, rally, decline. We're going to get a breakout anytime soon. We expect today should favor gold due to one, the GDP data that comes out for the United States, and two, Ben Bernanke should be giving FOMC minute at around 3:15 Trinidad time. Our first level of resistance, guys, which means where we're going to look to come out the trade, is 1697. So we bought at 1677. We're looking to come out at 1697, right? Our second level of resistance, we're looking to come out at 1724, right? Anywhere between these two price point, we're looking to come out for our profit, right? Good. So let's take out the first one, right? So I want you guys to follow me, right? So this is our upward trend line to gauge the trend, right? This is like a downward trend line, but even though the overall trend is bullish, we're drawing a downward trend line to gauge where the pullback or the reversal will occur. So the market bounced on the long-term trend line. Technical traders will realize that this is a buy opportunity, right? So you have some people that bought at the bottom, some bought at the opening price. We know bought on the confirmation. Once the fundamentals add up with the technicals is when we will enter the market. Now we're looking to come out at around 1700, right, for profit. Good. Matter of fact, let's adjust our profit take further, right at 1705. We're coming out at 1706, right? 1706 for a profit. Good. Now we realize our P&L fluctuating from 43 to 40 to 39. We're just going to leave that, guys. Let it fulfill. Our history for the month so far, we're up on basically the account with our methodology use. As you could see, where our profit is negative, positive, negative, positive. Overall, guys, we were doing a series of recordings from the beginning of the month, and we closed the month with total profit $1,016 US. So we're up 33% for the month of January. You now place another trade, so even if we lose on this trade, we're still up for the month. Let's come over to Bloomberg, okay? We're going to touch the fundamentals. What I want you guys to understand while the screen loads, you trade for profit, right? Trading at the market is like any other job. It's like going to the gym. The more you practice, is the better you are, okay? Currency traders are the ones that are able to know what's going on around the world and capitalize it from anywhere in the world. CIT, we are the bridge to the financial market. We hold your hand, guide you accordingly to know when to trade, when not to trade. Today's Wednesday, so if you guys were in our education, this training session is a part of the Earn While You Learn, where students are able to trade their real investment, not when you now start, couple months down the line. Once you have the basics under control, once you're doing demo trading, and then now your confidence move to another level where you think that, hey, you knew how to analyze your charts. CIT now will gauge your track record from your trading statements to know whether or not if you're ready to trade live. So let's cover the fundamentals. US stock falls as data show economy unexpectedly shrank. US stocks fell after bench indexes climbed to a 5-year high as government data showed the American economy unexpectedly shrank last quarter. That's the reason why we're buying gold, because once the US dollar is weak, gold going to rally fundamentally, right? No, we're talking about GDP, guys. We're not talking about interest rate or inflation. GDP, right? This is a strong data. So the reason why the market did not take off, we'll have another major announcement coming out, 3:15 Trinidad time, which is Ben Bernanke FOMC statement. That's the US Federal Reserve Chairman. So we bought gold. That's only commodity we're trading for the day. No currency, only gold. Right? We want to close the month at least above 20%. Right? Above 20% ROI. Okay? Now, let's come over to Reuters. According to Reuters as well, US GDP misses expectation. Alright? Now guys, that announcement came out 8:30 US time, which is 9:30 Trinidad time. So it's brand new, it's fresh. So it doesn't matter if you come in the market 3 hours after or 4 hours after, you still can gain on the market. All you want is just somebody to guide you along the way, to help you to develop what is called trading intuition. Right? On our website, guys, you're able to come to results, and you could select any month of your choice to have an idea of our education methodology track records. Now, once the trade has been fulfilled, we're going to go ahead and upload the result in detail on the website so that anybody could view it. On behalf of the trading team, I'm Sheldon Powell, founder and CEO at Caribbean Institute of Traders. I'd like to thank you all for tuning in to watch our live online presentation. You could go ahead and register yourself to one of our free presentations to give you further information about who we are, what we offer. On behalf of the team, I'd like to thank you guys for tuning us in. Have a good day.